Hey, how are you guys? Crypto Sniper hat on today. Invisible. I need to get three hats. One with a big Bitcoin symbol on it, and one with a big reset, crash, meltdown, volcano on it, and one with a market sniper sights. But anyway, crypto clip today. So around about June the 30th, I put out this on that I just had a chat with the premium guys and said that I was reverting bear and that Bitcoin was probably going to sell off for a short time frame. Was on my webinar to the premium. Main meme to revert, that was over here. And let's just draw and scribble. Main reason behind this was we'd had quite a slap down from the big high, and the rally was not as effective as I'd expected it to be. So let's have a look at the chart for that. This is why we were saying it. And I was also pointing out alts won't save you. In other words, it's time to revert. So I actually went from investment temporary into fiat and went leverage short for a short period. Not because it was call of the Mojo trend. This was the 30th. Here it was right here. So let's once again get the pen up. This is quite a busy chart. But here it was. You can see the 30th over here, and we were starting to top out and we were going convex. We had a bit of a bear flag channel and we were getting convex in there during the period of the 30th, and this was after this level of sell. So we'd seen we'd only got that high, we went down a little bit, we went back up, and we couldn't make a new high. This was a warning to me. So we do relative strength assessments. We know what we expect out of a bounce. And in the end, we ended up getting inverted structure without giving you rhyme and verse. The goal was you certainly at the latest wanted to be short there. You could have a stop there. And the long and short of that, which is what was discussed and put in our community share, was in actual fact, close that, a risk reward of over 10.55. So I mean, had you had 12.5 Bitcoin, you could have pledged up to 10 of it on there, and you could have taken your stop loss at this level in and around there, and you would have been good to go on that red level. You would have been at 11,891 stop. You could have got in at the last possible moment, which is 11,922, and you would have spilled all the way down to 9,772. That's what the inverted HVF gave us as target, and it was just made. It didn't even make it on the first dip to the low. It only made it on that final little hammer low. Kind of a very, very close. So it's a projected target that was done. And all the way, continuation patterns, rising wedge, another inverted HVF, broadening. We talk about broadening. The trend in is the trend out on an ascending broadening, etc., etc. All that you can learn on much more theory in inverted HVF methodology, pattern methodology in our self-study area. And as part of our community, this was all being discussed with us in Crypto General. This is where we've been talking the ebb and flows of Bitcoin at great degree. And you can see that target, and this was a major buy point. It's a very good early long for me on balance of probabilities. That's what we were sharing there at that juncture. That came after the target was essentially made, as it was made there. You can see it being shown. And so we went from being the guy saying we're going to be short from June once target was made, and especially as it was just made and it was also regularly pushed back against, we reverted back bullish again. Here there's still some way to go. You can see this tweet pointing out that we still think in spite of that little pause area, and there was a reason why that paused over there. It was the 11k level. It was trying to hold the 11k level, and what I was saying is 11k level is going to run, and we're going to dip into the upper nines. And largely that happened. We don't get it always right, by the way. Absolutely not. By the time that tweet went out, it actually broke down. So that was a bit of a BitMEX trade that was going on. Eventually then target made. And then some folk were asking, well, as I say, at a later point, they were asking questions once, as I said, that it served the community in terms of that actually we revert back bull now. We feel that that is going to be the end of it. Now, this is still early enough for many of you who to benefit. So you can understand that my premium community has already been briefed on exactly where they're at, and they've taken in their positions if they elect to, if they like the view, recognizing we can always be wrong, usual T's and C's, etc., on what Bitcoin does next after its target run. But what you'll find over here is that we're biasing for the rally up now after the dual dips below 10k. So there were 2 dips, one that just missed fulfilling the target. It also depended on exchanges. Some of those exchanges both fulfilled the target. There's actually one where the target was actually just missed as well. So if you were trading on Bitstamp, you would have been a bit unlucky. But the subsequent reaction, we were expecting it to be strong. Why? Because we're already scenario casting what should come next. What's our scenario cast? That's the benefit. And this will benefit you potentially by watching. This impulsive price action is what we were hoping and part expecting as one of the scenarios. This, incidentally, is 3 rising method by another name. You'll learn on a program why we talk about this and its role. So that's up, drift up. But we'll show you more in terms of where we think it might take you. And this is why we are quick to have that short period, revert back, bull. Here's the reason why. So this is the scenario that I've been sharing with the community, and you can get it now in retrospect, but there's still time for you to benefit to some degree from it. Our guys will be in nice and early. That's what they deserve. If we turn out right, as I say, we're wrong regularly. The game is not about being right or wrong. It's trying to be accurate and adjusting all the time and flipping if you realize that it's not wrong. It's, do you make money? Do you make money? Are you adding BTC value? Simple as that. This is how I've drawn this. Now there is a fib on here as well, so I'm going to actually take that fib off. There's additional information as to why I put it on for my main community, and that can stay with them. Let me just delete that. But I will share this much with you. Overall, this descent has made lots of falling wedges for me. So the initial falling wedge, we are always comfortable with a final capitulation out the base of a wedge. Again, a lot more theory on that and the types of wedges and what you get. That's bespoke to HVF method. You can find out about it if you want to go to themarketsniper.com and learn. But in essence, you've got the pink falling wedge over here, which is the sell-off from the highs. By the way, this is the first crypto vid I've done in a while. On this sell-off on the highs, we had earmarked it. We repeated that we would said 13.5 to 14k. There is an increase in the volume by price levels there, and it could be a potential tough inflection point. Also, on the bigger time frame, you had a legacy inverted HVF. Our axis for that was running straight through that level where it resisted. You betcha, right there. So because we do our previous draws and we recognize what was effective on the way down as down setups becomes effective to get again. I'm not showing all of these to you. It was clear on, I don't want the YouTubes to get too long, and it's detailed information that goes into the community. But there were inverted HVFs on the way down that had made key levels. So the volume by price, the inverted levels, and not part of HVF method, but something we sometimes use, the fib level from the 20k up top, the December 2017 high to the December 18 low. Actually, you had just run the 61.8 line, which was also over here, just above the 13,500. So there was a cluster of levels. Now, if you were aware of that, you would have been quicker to revert short, or certainly to go defensive if you don't like shorting Bitcoin. So anyway, that's a long and short about this turning point over here. The long and shorts. Oh my goodness. Sorry for that. Puns everywhere. So the pink down, and then you get the break up, but it didn't do enough of an up for us to impress us. So this is why in the 30th we're saying we don't like this. This is going to spill over. We then got the ascending inverted HVF, and it could potentially overperform, but didn't. Just made target on that low wick. So we clear all that. That is giving us information. It is done, and it is holding. This, by the way, was a falling wedge again in pink, again with a little spill out at the capitulation end. And what happens is that capitulation selling is exhaustion. People who can't take it anymore. Damn, I'm giving back all my money. Just get me out, just get me out, just get me out. Never mind the price, get me out. I can't bear the pain. I can't bear the pain. They were pain there, and there was pain there, and there was smart money buying the dips there. So what you end up actually getting within these two pink wedges and their subsequent rally points is you get, that was the up move into the original ascending wedge, you actually get a falling wedge like that. And that's what we have right now. Now, falling wedge has playbooks, and we detail all the different versions of what we expect from the falling wedge. That you need to know and be part of our community to know. But the long and short of it is, in most instances, with some noted exceptions, and we discuss when those exceptions occur, and they don't occur particularly here. In most instances, you will break out to the upside of the wedge, maybe a return move and continue with an up leg, or once again have a little look out the bottom first before you break out. Now for me, this is a falling wedge of quite some scale, so let's just clear it up a bit and redraw. This is a falling wedge of quite some scale, and we have encompassed the lows there, so I don't see us falling out the low end. Here's what my prediction, my best prediction, and there are many scenarios that could happen, but my best prediction is having bumped out of the pink wedge here, as we bumped out of the first pink wedge and the second wedge, you will now travel across to the other side of this wedge. You will either do one of two things. You'll revert back in and give some folk a second chance, but not touch the low end. In other words, the absolute low is in. You'll either make a higher low than this, or not even pull back very far and then just go for the break. So one of these like that, or you could just go straight into the break. But I would imagine some degree of pullback and then pump for the break. After you've had that initial push away for the break, a bit of disbelief, return move is possible, and then you move again, and that will probably be one of the best parts of the move. And I would expect top out. There's two arguments. You could continue to go, but I would expect top out in the 12.5 down to the 12,000, 11.9 range. There was resistance here, there was resistance there to the rallies. We were in a different frame of mind. We were on the down leg, the floor was slipping under us. But that's still going to be some degree of concern. You might make a marginally higher high than those there, or you might stop approximately the same level or a little bit below. But I would imagine somewhere in that zone we'll have a little rest period of consolidation. Either it'll set up further continuation for upside, a reversal pattern, maybe a head and shoulder, and then put in a little bit of a down leg for a while. Who knows? But the next short term, there's a lot that can happen in that time. So I don't want to speculate too far into the future. The key element is the breaking of this gray wedge to the upside after a short move and possible return move, but it doesn't have to, and then a move up, which means that from 10.5 there's potentially still $2,000 in it, or certainly $1,500 as you approach a key round number. We might get a bit wobbly there, and you may only end up in this zone here if it's a little bit less. Wow, but there's been quite an electric defense reaction here that's quite impulsive, and as I've already mentioned, 3 rising tactical up method after that sell-off. There's a gap in data here on Gemini. I'm using Gemini because I've got so many BTC charts. I wanted one with less drawings on it. I don't want to throw away my stuff. It's not the most significant exchange, but it's pretty similar and a good proxy for most of them. Okay, so that's what you have. This is why, and many people go, he's always wrong. Yeah, probably am. I don't care for being wrong or right. I want to make money. If I'm wrong, if I flip quickly, I make money anyway. If I start out right, but I don't know how to trade and I size wrong, I lose money. It's not about wrong or right. But for the guys that go, oh, he's always wrong. Yeah, well, we're changing. It depends when you get the news. If you saw that we reverted bearish on the 30th, maybe it doesn't look so wrong. And if you saw that we were already talking about reverting bullish and with scenario casting ahead, it's not where you're at right now. It's what the possibilities could be in the future and looking at them and what construct is being built. This chart was shared a long time ago, and it may turn out to be a worthless one, but it was shared, and the thoughts that go with it in our community over here and even before then in earlier discourse. So the key element is falling wedge show that there is drift buying under the market. Before we even had the pump on the bullish side, we were looking for the lows to come in here. We're looking for it to spill out down here and then get the impulsive move. The key thing is you've got to be early, and to be early you've got to have some basis or justification for what may come next. That doesn't mean you're going to be accurate every single time, but the difference is you're looking for asymmetric rewards to very defined risk. Once you've had repeated tap outs for lows, plus you had the target that you just achieved, you've got a reason to believe there's going to be progress decay. You don't have to go too much further to be wrong to get out, so your stop can be tight, but the move you can gain can be good, and if you're holding longer term, it can be very good. That is the key about being successful in trading. So forget being wrong and right. That's ego talk. We will be both wrong and right, and this is how we're playing, and this is how we're rolling in the community, and this is what you'd get if you're part of us on themarketsniper.com. And you can go to check a free webinar, and you can follow all the interesting things we're doing. By the way, alts, still not interesting to me. Want to cover one other thing while we're on this. We made a big store prior to this high of one other thing, and this we did get accurate, and that was the key chart was the Bitcoin dominance. Bitcoin dominance was the bull market key chart. We mentioned, I've got an orange line here for you on the height. We had a couple of reasons. We initially had 64.6 as a target. With HVF method, we got a wind up and we pushed that to just through 65. And you can see the highest point of Bitcoin dominance. Let me just add for you what needs to go onto that chart. BTC USD. We'll take anyone. What the hell, Binstap? You come up first. Oh, wow. By the way, there you go. There you have it. That's your Bitcoin, and that's your Bitcoin dominance. The high of the dominance as you ran target. If you closed your Bitcoin longs, as we suggested, initially at 64.6 and then revised upwards to 65% on this Twitter feed till Kingdom Come it was mentioned, and I might have to go a little bit further back to find those. Where we contrary Bitcoin dominance, there she goes, at the 65%. If you closed it as it was made, there you go. You're looking at that point right there. You would have got out on your Bitcoin up top by the 13.5. Your high point for the 65, let me just draw that with the pen for you, because it's not where I've put the orange line. That is the peak turn down. That's the point when it turned down. As it broke the 65%, if you had taken that line out, welcome to the guy who sold the high. This is in percentage because the dominance is the chart, but that is the Bitcoin in dollar. That was the call. Dominance was the key, and that alts are not the place to hide. Alts haven't been the place to hide. Yes, they've gone down slightly less during this period that Bitcoin has adjusted, so that's brought dominance further down for Bitcoin. You see 9%, while Ethereum's only gone 6%. Well, how's only going down 4.5% good news when you could have been in fiat and you could have accumulated 10% more Bitcoin? Think about it. 10% more of the most liquid gold market for being in fiat, or celebrating because you're in an alt that's only gone down 5% in fiat terms. There's only one call for that. Out, and then back in at the key moment if it turns out right. We'll see how this plays out, but Bitcoin dominance was the key setup. HVF method, we were the only people talking about it. We're the only people that gave you 64.6 and later 65% on a further wind up and a serpent. Why? Because we have the method. We had the method, and we look at all things in the chart, and we have a community that's looking at all aspects together. Together you can be stronger. Anyway, that would have sold you the high. I just want to say fair play. Maybe those that are bold and generous will give credit for that shout. The unwilling and the ungracious and the angry will tell us that we nasty little braggarts. I apologize. TheMarketSniper.com is where you go to learn more and to be part of this community. Thanks for watching. We'll keep trying to share interesting points to help you grow, but the real learning is with the people that have committed the resources to learn it. You can only go so far on Freeview, but I'm sure it's welcome, and I hope it helps. Okay, that's it from us. Bye for now.